Hi, Tim Biggam back again this week for Traders Exclusive, and today was the day that the ECB announced, or should I say didn't announce really much of anything. President Mario Draghi pushing it out till at least next year before really doing anything, obviously with rates on the short end, being negative in some cases over in Europe. Rate cuts will have no meaningful effect. They were really looking for quantitative easing to actually come out and have him say that they will buy some sovereign bonds. In essence, the big banks were looking to say, hey, take this away from us at a better price and we'll be happy with that. So he did not come out and say that. It may be difficult to do that. So the market didn't like the fact that there will be no imminent QE. The S&P futures sold off on that. We're down about 6 on that, although the price action certainly muted given the rally we've had since mid-October off the Ebola lows. And it really comes down to, the macro news is really starting to deteriorate. Inflation virtually cut in half over in Europe as well. Certainly over here even, we're starting to see some slowdowns. China absolutely slowing down. So that trade-off of free money versus bad economic news, or certainly not great economic news across the board, is the trade-off we're seeing here. So I think a little digestion of these gains here may be warranted. I'm selling some out of the money call spreads on the SPY. Actually did some weeklies that expire tomorrow at that 208 strike price, looking out at the 209s for the following week. I just think the market, given the fact that valuations are where they're at, may have difficulty, moving up appreciably higher from here, given the veracity of the rally so far. Also looking at some option order flow recently to kind of, delve into the markets using an RB trader scan to do that. Yesterday saw Abercrombie and Fitch report earnings. They beat by a penny, but their guidance was way below forecast. Initially, the stock was down slightly. Big seller came in on the December 27.5 puts, about 6,000 traded. Subsequent to that, the stock rallied, closed up a little over $1. So that kind of price action where you get somewhat bad news, the stock rallies, and there is some big put selling in front of that stock rally, leads me to believe that maybe the lows are in here. So I'm selling out of the money put spread using that strike price, selling the 27.5 puts, buying the 25 puts, collecting about 27 cents credit on that one. Positioning about 8% below the current levels of Abercrombie and Fitch. We have earnings out of the way. Christmas season already kind of reported here. That looking a little bit bleak as well across the board. So again, this trade-off between not so great economic and worldwide macro news, combined with the fact that free money here at least has come to an end. Certainly with Abe's, vote coming up, we may see a little bit more out of Japan, but given the fact that the market has run up so much, I'm a little bit cautious here as always. VIX down around 13. I think buying a little put protection here against your portfolio, just as a, kind of an ongoing program, always makes sense, but especially at these kind of low levels. So until next week, this is Tim Biggam. As always, keep those position sizes proper and those stops going. Take care.